Today we're going to be talking about draw on liquidity. What is draw on liquidity? Draw on liquidity is a crucial component in trading. It refers to how the market targets liquidity pools typically located at highs, lows, and around key price level. Understanding draw on liquidity helps traders anticipate price movement and make informed decisions. So it should actually be the most important concept behind your trade idea, because you need to know where the market is actually coming from and where it is heading to. That's what draw on liquidity is all about. So what's the importance of draw on liquidity? Understanding draw on liquidity is crucial because it helps traders anticipate market move by identifying key price levels where liquidity pools such as swing highs and lows accumulate. These levels often act as magnets for price, and recognizing them improves trade timing and risk management. Draw on liquidity also reveals where institutional traders might step in, allowing retail traders to align with smart money. Additionally, knowing where liquidity is drawn helps avoid common traps like stop hunts and avoid unnecessary setups. So there are basically two types of drawn liquidity: the short-term drawn liquidity and the long-term drawn liquidity. Short-term drawn liquidity helps to identify where a retracement profile or short-term moves could end. Like, let me just give an illustration here. Like, let me say we are in a bullish trend, rejecting lows and breaking highs. So you can see here, this retracement profile down here, this will be your short-term drawn liquidity, because you're actually bullish long-term. So this old low here will be your short-term drawn liquidity, and this high over here, and maybe there was a high here, will be your long-term drawn liquidity. Short-term drawn liquidity are just like to catch the retracement profile and all of that. I focus mainly on the long-term drawn liquidity because I want to actually base off this large expansion move. So long-term drawn liquidity, I just actually explained this. Long-term drawn liquidity is about major moves and expansion. It helps you see where price is heading in the bigger picture beyond immediate market reaction. This is used for understanding where price is likely to go as part of broader narrative, guiding larger moves over higher time frame like daily, weekly, or even monthly. So to understand drawn liquidity, you need to understand order flow. So order flow is very important for determining the draw. If you understand order flow correctly, then you can easily determine your draw on liquidity. So this is just actually revision on our previous class. Then what is the bullish order flow? Breaking above highs and rejecting lows. Rejecting highs. Sorry about that. Rejecting highs, that's for your bearish order flow. Rejecting highs, then breaking lows. Here, this low was broken and this high was rejected. Same thing here. Rejecting highs, breaking below lows. Rejecting highs, breaking below low. That's your bearish order flow. Then for your bullish order flow, rejecting lows, breaking highs, rejecting lows, breaking highs, rejecting lows, and breaking highs. That's for your bullish order flow. That's how you determine the order flow for each market condition. So here are some important drawn liquidities. previous day high. That's if you are a buyer, you can target previous day high. Then if you're a seller, you can target previous day low. Then let me say if your draw on liquidity is the previous day high, then you can position yourself on the 4-hour CROT time frame to target your previous day high. Then your previous week high, if your draw on liquidity is previous week high, you can position yourself on the daily CROT and you can target your previous week high or low. Then for previous month high, you can position yourself on the weekly CROT. Then other drawn liquidities are session highs and low. Might be Asian session, London session, and New York session highs and lows. Then another important drawn liquidity is the Monday high and lows. So this actually wraps it up for the notes. Let's go on to the live chat. So I'm just going to use last week price action, then I'll go to this week's price action. So here on the 4-hour time frame, the 1 hour time frame, let me go to the 4-hour time frame, back to the daily, because we want to actually focus on the daily. So here, remember what draw on liquidity, we have two types, the short-term draw and the long-term draw. Short-term draw is where the retracement profile actually happens, where the market actually retrace a little and before going on the main directional bias. So here on daily, you can see we are actually bullish. Let me delete all these drawings. So here on daily, you can see we are actually bullish. How? Because we are rejecting lows and breaking highs, rejecting lows and breaking highs. So we are actually bullish. So this move downwards here on the daily time frame was a retracement to our short-term drawn liquidity. Remember, I told you two things price actually does. It attacks and liquidity pools and it rebalance and imbalance. So here you can see this fair value gap here. This fair value gap here. I'm coming, okay, here, this is your fair value gap. So the market actually rebalanced this imbalance with this move lower here and swept this candle range low here. This was Monday's, you can see that time zone. This was Monday, and Tuesday did not actually sweep any previous day high or previous day low. This was an inside bar candle. Then what happened Wednesday? Wednesday took out Monday's high and took out previous day high. So previous day high swept. You can target your short-term drawn liquidity now, which was our imbalance over here. Previous day high swept. Target previous day low here. This will be our draw on liquidity. So this is actually your total soup. This whole move, this fair value gap, I didn't actually choose this. Why didn't I actually choose this? Because this fair value gap, if you see here, I will just call this, and let me just say a breakout mitigation block here. You can see to your left hand side here, we got a breaker or mitigation block here, which is actually supporting price to go higher and not going down below. So price rebalance this imbalance on Wednesday, sweeping Monday's high first with this move, then targeting Monday's low. So let's go down to the lower time frame so you can see how it actually played through. So here, let me turn this on. Okay, here we are. So you can see Monday Monday here, Tuesday. So let me just start with this. So sorry about that. So let me say you are a buyer. This Tuesday, you can target Monday's high first. Sorry about that. You can target Monday's high first. You got your sweep. Yeah. And here, Monday's high was swept. And you can target your previous day low. This is Wednesday's price action. So what's your previous day low? Tuesday. Tuesday is your previous day low. And you can actually target Monday's low as well, which is this low. And you can see how knowing where the market is coming from and where it's heading to actually helps you a lot. So here, Monday high swept and swept on Tuesday. Wednesday, expansion towards our previous day low, which is Tuesday, and towards Monday's low. So playing this out in time. And here. So here we actually swept our Monday's low and rebalanced this imbalance over here. So the market is actually reacting from where? If you go to your 4-hour time frame over here, the market is actually reacting from this order block over here on a discount region here. So you got your key level over here, and we are swept Monday's low and Tuesday's low and closed back into the range on the daily time frame. Let me show you what I mean. Okay, here swept Tuesday's low and Monday's low and closed back into the range. You can see this long wick over here. So this actually shows we are actually going to see higher prices. So where can you target? You can target this high as your next drawn liquidity during the next day. That will be your previous day high as your draw on liquidity. So here, let's stay into 1 hour time frame. So here, our previous day high, which is our Wednesday or Thursday high. Okay, yeah, our Wednesday's high. Wednesday or Tuesday's high. So this is our previous day high. So we can expect, we can expect an expansion towards our previous day high, which is this blue line. So here, and we got our draw on liquidity, which was taken out on Thursday. We got a slight retracement into this order block firstly before expanding higher. So you can see the market profile. Monday and Tuesday range, Wednesday manipulation into our key level and rebalancing that imbalance, then Thursday expansion towards our long-term draw on liquidity. So that's for previous day high and previous day low. So let me just give you an example of previous week high. Let me turn this off. So remember that live call I actually called on level 1. So here is the weekly time frame here, and this was previous week low, which was swept with this move, previous week low and previous week high. So moving on to the daily time frame, you can see have a clear view of what I'm actually saying. This was previous week's price action. This was Monday, Tuesday, Wednesday, Thursday, and Friday. Here you can see we swept Wednesday's high on Thursday with this move and closed back into the range. You can target where your Friday's low, Wednesday low here. That's previous day's low. So you can target here firstly, that's your Thursday's low. Then you can also target here, that's your Wednesday low, previous day low, or your candle range low. Yeah, the same thing, previous day low. So here, back to why we are here. Here we got our long-term drawn liquidity. So this whole move dipping down was price actually returning to a discount region and reacting off this other block here. So when the market was actually here, I went live and gave this as my draw on liquidity. Why did I actually choose this? Because this is actually previous week's high. Let me turn on this so you can see clearly. So yeah, this was previous week's Monday's high. So here, Monday's high, Tuesday, Wednesday, this was a bearish week. And here, this was a bearish week. So here on Monday, and here we expanded towards our long-term draw on liquidity, which was this Monday's high. So you can see how I actually anticipated this to be taken out. This was previous week high, and it was taken out by this move here. Then we got a retracement down to the golden zone. Don't worry, we're going to talk about that. The golden zone of this whole range. Then before expanding higher towards our second draw on liquidity. So here, that's an example of previous week low and previous week high. So remember when I was actually giving you a daily bias, when I said close below or close above continuation. So let me just do a quick revision. So here we swept previous day's low with this move. So we target previous day high. Let me go back to this price action. I actually took this trade. Yeah, I can remember clearly. This was the total soup trade I took. Yeah, I took this trade and my draw on liquidity was actually Monday's high. So here, Monday's low swept around by Tuesday's price action, and I entered below here, and my final target was here, but I actually took partials where 50% of the Monday's range, which is actually this. I took my partials here, then I held to the final target, which is the Monday's high or previous day high. So here, total soup, and you got your order block here. As your key level. Let me put this red. Okay. Then you got your CRT low and your CRT high. So remember, I actually told you guys that CRT highs and low can also be used as a key level. So over here, the market retraced into this order block and sweeping this CRT low, where will be your next drawn on liquidity range high. You can target this, and here there was a retracement into this CRT high over here before going higher. Let's go to the lower time frame. So remember, from the 1 hour time frame, you go to the 5 minute time frame. So here there was a retracement here on this high, a quick reaction actually, retracement into this, then before expanding higher. Here turtle soup, order block here, then retracement sweeping this low, then before going higher. So that's how you actually use your previous day high and lows, previous week highs and low, as your draw on liquidities. So here, week below, closed back into the range. Next day, target previous day high. What happened the next day? Target previous day high. Okay, this is the 4 hour time frame, sorry, but I'm just using this as an example. So here, close, target previous day high the next day. If you're bullish, target previous day high. If you're bullish, target previous day high. That's your continuation daily bias. Same thing here. Bearish, target previous day low. Bearish, target previous day low. And also bearish, target previous day low. Then here we got a reversal signal, long wick, then before expanding higher. I'm just using this 4 hour time frame as the daily time frame example. So let's go into this week's price action. So here on the daily time frame, I'll have to remove all my drawings again. So here on the daily time frame, we got our previous day low, Monday, which was actually swept on Tuesday. So what will be your next target? Monday's high here. So that will be your, this Monday's low will be your short-term draw on liquidity, and your long-term draw on liquidity is higher prices. So here, long-term draw on liquidity, short-term draw on liquidity. Let's go to the lower time frame. So here on the 1 hour time frame, sorry for the noise actually on the background. So here we got our Monday's low, which was actually swept on Tuesday, with this candle sweeping this low, then closing back into the range. So here we're bullish to where our Monday's high, our long-term drawn liquidity. So here, Tuesday, the next day, we got a retracement into this order block, and this is actually a high probability order block because it actually swept liquidity, and it's actually on the discount or equilibrium of the range. Let me measure this for you all. Okay, so here you can see this old low was swept. So we got a ranging profile manipulation. Something actually happened to my network, sorry, let me connect back. Oh, Okay, so here we got a ranging profile, manipulation, then an expansion. We got a little ranging profile, then a retracement profile, then we got a range, then before a expansion profile towards our final draw on liquidity. So let me say you are a seller. So So you sold from, let me say, this high after swooping this high. So your short-term draw on liquidity, maybe you can target the discount region low here, this low on the discount region. This will be your short-term draw on liquidity. Remember, long-term you are actually bullish because our order flow is actually bullish, rejecting lows and breaking highs and so on and so forth. So we are actually bullish, so we swept this low. So this will be a short-term draw on liquidity just to make some little funds. Then your final target will be this high. So this is Wednesday. So you can first of all target your previous day high, which is Tuesday's high. Let me take this out. So you can target this firstly, your Tuesday high. Then before you can target your Monday's high. Then you can offload fully here. So that's basically how the algorithm actually works. So here, let me decipher the next price action. So what actually happened on Wednesday? After sweeping our Monday's range high, you can see the new range high swept. You can see the long wick above. Monday high actually already swept, so we're moving from a buy program to a sell program. So yeah, range high and range low here. So range high swept, you can target your range low. Sweep below, wick above here, you got your wick above, then your close back into the range. This candle close back into this range, wick above, close back into the range. Remember your daily buyers video, close back into the range. You can target your range high. Firstly, you can target your previous day high for your first target, then maybe you can target this range low for your second target here. So then the next day you can target your range low of this price action. So let's go to the lower time frame. Going to the 1 hour time frame. Okay, here we are. This was our range low, our second target. This was actually our first target. So here we got, let me end here. So here we got a sweep of this Monday's range high candle, then Wednesday close back into the range, Thursday continuation, sweeping our previous day low, which is your Wednesday's low. So previous day low taken out for our first target. Second target, our Tuesday's low, which is our daily candle range low, which was swept by this move here. Then what happened the next day? We got a little retracement profile. Then you got your total soup sweeping this high. And where can you target? You can target your Thursday's low. So you can see how the bearish order flow is actually revealing itself. So here, rejecting highs, breaking lows, rejecting highs, breaking lows. Then before we got the weekly close price action over here, this candle's move was the weekly close here. This was London's close here. So the weekly candle closed here. So this might actually be the beginning of a new bullish order flow, because here we swept this low, but we haven't actually broken above this high. So this might be the beginning of a new bullish order flow or bullish trend to higher prices. So here, this move is Monday's price action. So here the market actually returned to a discount region here, which is this order block. Because if you take your FIB from here to this high, I didn't actually use this high because I'm using my recent swing high and my old swing low. So here, this is actually on the discount region, and you can see how beautifully the market reacted off that. And going down to the 5-minute time frame, you got your total soup. Before, this whole move was a retracement. You got your total soup before reaching your 1 hour order block key level. And if you look to the left, what do you got here? You got your low resistance liquidity run, and what will be your draw on liquidity? Previous day's high, which is Friday's high, and you can see the market is almost there, just a peep away before reaching your final draw on liquidity. So this is your total soup in key level before reaching your final draw on liquidity, which is the previous day's high. So that's how you determine your daily buyers and draw on liquidity. So if you got any question on draw on liquidity or daily buyers, you can do well to actually message me on Telegram. So you can see here the key level is the midpoint of this order block. So that will be all for draw on liquidity. Thank you.